How does a lien affect my home equity loan? Imagine trying to unlock the value of your home to fund a big project or pay off debt. You might consider a home equity loan, but there's a key factor to understand first. When you take out a home equity loan, a legal claim called a lien is placed on your property. This lien acts like a security for the lender, showing they have a right to your home if you don't repay the loan. It's similar to a mortgage, but it can also be a second lien if you already have one. If you have a first mortgage, that lender has the first claim on your home's value. Any new home equity loan or line of credit will usually be a second lien, which means it's lower in priority. If you default on your payments and your home is sold, the first lien holder gets paid first. Because of this, second liens often have higher interest rates to compensate for the extra risk. The amount you can borrow depends on your home's current value minus what you owe on your first mortgage and any other liens. For example, if your home is worth $300,000 and you owe $100,000 on your first mortgage, you might have up to $100,000 in equity. But if there are other liens like unpaid taxes or judgments, these can reduce your available borrowing amount or even block you from getting a new loan. Liens also show up on your credit report, but as long as you keep up with payments, they won't hurt your credit score. During the loan term, you still own and control your home. However, missing payments can lead to foreclosure, just like with your primary mortgage. Before applying for a home equity loan, it's smart to check your property's title for existing liens. If you see unpaid taxes or judgment liens, you might need to settle those first. Lenders will also review your income, credit history, and debt-to-income ratio to decide how much they are willing to lend. Having a first mortgage in place doesn't stop you from getting a home equity loan, but it does limit how much you can borrow. It's all about how much equity you have left after existing debts. Remember, a lien is a normal part of borrowing against your home, especially with banks and credit unions. Understanding how liens work helps you make smarter choices about borrowing and managing your home's value. So, always review your property's lien status and talk to your lender to see what options are available to you.